Folks, my next guest, he did not win the Chief Executive Award this year, but give him some time because he just started his own firm and he's off to the races. I'm going to bring in a Humilis Investment Strategies CEO and CIO, Brian Belski. All right, Brian, the first question is obviously, what we've heard so far, a lot of changes on the economic assumptions. We got 3%. Some thought we'd have more than that. A hawkish cut. What are your thoughts?
I like the dissension part because it kind of mixes it up a little bit, number one. Number two, I mean, you're looking at, the Fed has a dual mandate, the inflation and unemployment.
Right.
Look at the employment numbers that they're looking at going forward. They're looking at unemployment actually to tick down.
Yeah.
Okay?
Yeah.
So what does that tell you? It tells me that they're pretty confident in unemployment, and that's why they're not.
In some ways, you could look at this as almost a victory lap.
I think so. So all of this stuff about, we're so focused on inflation, man.
Right.
You got to think about the unemployment side of things. And I think if they're right, then I think they're doing a great job in terms of how they're measuring out these cuts.
A lot of people are wondering about the effectiveness of the institution itself, right? So normally when the Fed starts cutting, right, Fed fund rates go down, right, and so do bond yields. They go hand in hand, except this time, Fed fund rates they've cut, but yields are higher. Is this a red flag for you?
I don't think so. I think that we've actually, if you've seen the last few years, you remember 2022 yields went up. 2023 yields went up in the fourth quarter. Last year, not as much. So this might be a little bit of a seasonal thing, number one. Remember, number two, this chart you had before about 2022 just getting crushed, some of that was a snapback, oversold bounce. So I'm not too concerned about this. What's interesting to me is that you didn't have a lot of sell the new, or buy the rumor, sell the news event. This time around, prices have held in there pretty well.
Your theme of the 2026 theme is really gets back to stock picking. But the more I think about it, and it sounds somewhat cliche, it feels like every year is a stock picker's year.
No. If you take a look at how so many people have just been focusing on buying the index, buying the index,
right.
buying the index, and even on my former institutional clients of doing primarily institutional work the majority of my career, when they don't know what to do, what do? They go buy an ETF. So I think what people don't understand is even it's already beginning to occur in the Mag 7. We're seeing massive fundamental dispersion within those 7 stocks.
And you see that as a good thing. The broadening of the rally is a good thing.
It's a really good thing. I think next year you're going to have the equal weighted S&P is going to do very well. If you look from a fundamental perspective in terms of earnings, valuation, operating performance, they're improving dramatically. It doesn't mean sell your tech and communication services, because we love those sectors, but we think that those are going to come back. Okay,
and you like the small caps as well. I want to get to just some of your recent picks here. It's sort of an interesting smorgasbord. You got financials, you got the Delta. What's the central thing that kind of drives this stuff?
Themes. So Wells Fargo, we think, to the next 2 years is what Citigroup was the past 2 years. Turnaround story, great management, operating performance. BLD is top billed. I think we're going to need to be more cyclical in consumer discretionary. Delta Airlines, best in brand company in the world in terms of airlines. And finally, Rockwell, automation. We think from the AI side of things, that's a major, major trend. And so many people are just talking about technology. I think automation and industrials is going to be really important.
How's it going with the new firm?
Oh, it's great.
Good.
Thank you, man.
Well, man, great seeing you. Great seeing you, especially on a day like today.
Thanks.